So I've been messing about with this trading strategy recently and actually gained 50% growth in a very short period of time. This trading strategy is based on the lower time frame, so let me just jump in and show you. So here's my broker account. I started with 500 euros, and as you can see, I'm currently 255 euros in profit. Most of my profitable trades came from Euro US dollar. However, I do believe that this strategy can work on other currency pairs or even stocks or crypto. Now, the indicator I use is Kaufman Adaptive Moving Average, and the main difference from a regular moving average, it actually adapts to certain market volatility and conditions. For example, this is the simple moving average that I usually use, and you could still probably pull off a lot of successful trades using it. Now take a look at Kaufman moving average, the same period of 20. However, in this case, we can see the candlesticks actually bouncing off more accurately using the Kaufman moving average. Every single time it touched the Kaufman adaptive moving average, it went towards the upside. And the same thing you could say for the 20 moving average. However, sometimes the 20 moving average has been broken. As you can see, the candlesticks are lower, which could potentially give you a false signal because you think, oh, it broke out, maybe it's gonna continue dropping down. However, the adaptive moving average doesn't do that. Now there's two ways to actually trade. I'll show you both of them. If you've been watching my videos, you know that I trade with 20 and 50 moving averages, and I added the adaptive Kaufman moving average, and it became like a third leg that is also accurate. And then all I did is wait for a breakout. If I saw a breakout, something like this is perfect. All the moving averages are at the top. We have a candlestick now crossing at the bottom. We can continue trading, and look at this, it would have been a beautiful trade, and you can actually not even close this trade straight away, even though it's like a one-to-one risk reward. Let's say you extend that, you close 50% and you carry on running. Look at this, it's a beautiful trading opportunity. From 12 pips continues on to 60 pips. And when do we close? When the adaptive moving average is actually crossed. So when does it cross? Look at the purple line. This is where we cross. So if we move the take profit level around 54, 53 pips closure, and this happens a lot, especially when there's volatility in the market, and you can expect a lot of it when trading Euro US dollar. So if you're going to use this strategy, make sure to combine multiple time frames and price action. For this example, let's say Euro USD 15-minute time frame. This is where you analyze everything, so you spot a good area of sensitivity that has been broken by a bearish engulfing candlestick, and you also know the moving averages are at the top. On the 5-minute time frame, you can see the 5-minute is trending down and the 1 minute is doing the same thing. So let's just see what happens on the 1 minute time frame. It just continues dropping down, and this would have been a beautiful trade. And look at this, adaptive moving average nicely reacting towards the candlesticks. You could potentially even re-enter every single time it makes a new low as well. Really depends the way you trade as a trader. However, trust me, this works. So the second way, and I think the best way to actually use the adaptive moving averages, is just add two of them on the chart, period of 20 and period of 50. The same moving averages, just not simple yet adaptive, and use them on 15-minute, 5-minute and 1-minute time frames. So let's identify a few things. So we have a trend just over here dropping back down. What happened? We had a nice cross. What else happened? The moving averages also crossed recently. This is a great trading opportunity. This is what the 5-minute time frame looks like, a nice push towards the upside. And this is what the 1-minute time frame looks like as well, a strong push towards the upside. Now, because we want to get a better entry, we don't want to enter on a push. Remember, push exhaustion, right? So what you want to do is wait for another candlestick closure on the 15-minute time frame. So let's just do that. Wait for a nice candlestick closure. There we go. We get a new candlestick just over here. After you wait for an exhaustion, you come back to the 5-minute. That's where the 5-minute moving averages are at. That's where the 1-minute adaptive moving average is. Look at this. The candlestick is already touching the 20 adaptive moving average. This is a great indication for further kind of continuation push. Look at this. Push exhaustion, every time making new highs. This is a perfect scenario, a nice scalping trading opportunity. Let's long this position. You always want to cover your 2 moving averages. If you're entering on the 1 minute, cover the 1-minute moving averages, but probably you should cover 2 moving averages, let's say on the 5-minute time frame as well. This way it will give you great coverage. Even if the market decides to pull back, you have the 5-minute moving averages just there to save your butt and hopefully continue moving up. So let's just see what happens on the 5 minutes. So it continues moving up without a problem. There's no pullback. And look at this, it's respecting the adaptive 20 moving average perfectly and just continues going towards the upside. This is great, and you can potentially increase your profits every single time. And after it breaks the purple and green line this time, you can close off your position. So over here, your max pip gain is 34 pips. So you 1-to-1 risk reward first time, you close off half and you leave the other half running for potential further gains to maximize your pips this way and hopefully grow your account balance as well. And if you enjoyed this one, you will enjoy one of these videos as well. Trust me, you learn a lot. And for now, peace.